Enga mana, enga reo, enga hoifa, tēnā koutou katoa. Good afternoon, everyone. My name is Jamie Taylor. I am the General Manager for Commercial Development within Fonterra's Shared Services Division, otherwise known as Global Service Operations internally. Delighted to be talking with you all today. Equally quite gutted that I can't be there in person. Unfortunately, we still have restrictions on international business travel that mean I can't be with you. Nevertheless, looking forward to talking with you all. Going to spend the next 20-25 minutes or so talking about the journey that we've been on over the last 12 months in regard to all things data, reporting and analytics. Just to walk through the agenda for this session, I will start off by giving brief context in regard to Fonterra and our shared services operation, or GSO as we're known. I'll talk a little bit about Tahi, which is our GSO transformation program that is up and running, and the performance reporting framework that we're going to talk about is one initiative under that program. We'll then get into the nuts and bolts of the framework, the tool we've built, how we've got to where we have today and the learnings from it. And then all being well, assuming this runs to time, and you'd hope I'd be able to manage that given it's a recorded presentation, we'll have around 5 minutes at the end for some Q&A. So Fonterra, we are the world's largest exporter of dairy products. We are also New Zealand's largest company by revenue, so around $21 billion per year in revenue, and also by number of employees, so around 20,000 employees, the bulk of whom are based in New Zealand and Australia, which is where most of our manufacturing is. We're a cooperative, and we're owned by around 10,000 New Zealand dairy farmer shareholders. In the middle of the screen there, you'll see that we operate all around the world, so in over 100 markets. Some of our key markets, China and the Asia Pacific region, makes up around 50% of our total revenue. Down in the bottom right hand corner of this screen, you'll see a number of brands which may be familiar to folks on either side of the ditch. I will draw your attention to the fairly unassuming brown paper bag in the top left of that little graphic, which is a bag of whole milk powder. So milk powders and other milk derivatives in our ingredients business, they make up around 75 to 80% of our total global revenue. So they get exported out of New Zealand and Australia around the world and go into products like infant formula, cheese, yogurt, and so on. In regard to our shared service operations, so we're based in Hamilton, New Zealand, about an hour south of Auckland. We have around 400 staff, and we support around just over 100 Fonterra entities around the world. We've got three main operational towers that you see called out there, so global accounting, global business and HR operations, and you see the functions in the boxes below. For my part, I look after the commercial development team, which has got a number of facets to it, including the management of the relationship with our customers across the world within Fonterra. I also look after the digital platforms team, the commercial model, which is how we recharge our services back out into the Fonterra business, and also looking at service expansion, so opportunities to bring additional tasks and services within Fonterra shared services. So I wanted to take just a minute to talk about Tahi, which is our Global Service Operations Transformation Program. So Tahi means the number one in Te Reo Māori. The reason we chose that was because we felt it best represented many of the things that we were trying to achieve through the program, which was around creating one team, one standard way of operating, one process, and so on. So this is the infographic for Tahi, trying to capture what the program stands for on one page. It's obviously quite a busy infographic, so I'm not going to go through it in detail. Suffice to say that it's a pretty comprehensive and a holistic program looking at all facets of a shared services operation. There are two elements that I did want to draw your attention to on here because it's relevant to the reporting piece that we're going to talk about. One is the focus on business outcomes. You see that called out in the top right, and also under the ambition in the top left. Focus on predictable, high quality outcomes. And also within this infographic, the focus on insights, and that's called out under business enabling technologies and under the transform state that we're intending to move to. Tahi itself is made up of around 40 initiatives split across 7 work streams. And the boxing, don't worry, this is quite a busy slide, so I'm definitely not going to go through this in any detail. But the initiative that we're specifically talking about today is called out in that red box on the left-hand side. So BB5 sounds a bit like a Star Wars droid, reporting rationalization and centralization. So of these 40 initiatives, we have 25 of them up and running already at the moment. What I would say that has struck us as we've been going through this is that with a program this scale, there's a huge amount of interdependency between the various initiatives, and you'll see some of that come through as I talk about the BB5 initiative itself. So the performance reporting framework that we've built is really the output of BB5, or at least the first half of BB5. And I wanted to take you through the journey that we've been on to get to where we are today. So 12-18 months ago, this was where we were at. Like many organizations, Fonterra struggles with multiple ERP systems, and that causes problems within shared services. So for instance, if you wanted to take a look at payment to terms, you had to go to one report to see payment to terms performance in one ERP system and another report to see payment to terms in another system. All up, we've got 4 core ERP systems, plus a couple of legacy systems that we deal with as well. Over time, we'd accumulated reports. So each month we were generating 100 reports, diligently putting them together and sending them out into the business, which was consuming significant amounts of time and resource. We also had no idea actually how many of those reports were being read, and even more importantly, how many of those reports were actually driving any insight or any actions as a result. So to summarize, we had no true picture of process performance across shared services, nor the business outcomes that we were delivering. In addition to which, our operational teams were all measuring service performance, so how quickly we were responding to requests from the business, all measuring it differently and inconsistently across the team. So it was impossible to get a true picture of our performance in that regard as well. Where have we got to? Well, I'm delighted to say that as of today that we have a single structured reporting framework that gives us a single source of the truth. There's various layers to the framework, so it operates from an executive summary level all the way down into pretty granular detail. So if you wanted to look at a single invoice through the framework, then you can do. In order to drive the framework, we've had to build a data repository. There is a bigger Fonterra data play, as it were, that we will look to leverage in due course. But in the meantime, we had to build a standalone repository to drive the tool. What we've been very careful to do as we've gone through this is to make sure that we've fully documented each aspect of the framework. So every single metric, and as you'll see in a bit, there's quite a few of them, has been documented, how it's calculated, and the data extracts themselves have been documented as well, which systems they're coming from and the formats that they're in, the frequency that they're run, and so on. As you'd expect, the framework is ERP agnostic, so we're measuring true end-to-end process across all of the ERPs. And additionally, to address the point I made earlier, we are now measuring service performance consistently across all of the operational teams. So how have we got to where we have today? This initiative actually kicked off before the rest of the Tahi program, so it had to stand on its own 2 feet as a business case. One of the challenges with that was in regard to return on investment, because you don't know what you don't know and you don't know what insights the tool is going to bring. So putting a dollar value against that was pretty challenging. The way we mitigated that was to look at other organizations that had done something similar and extrapolate results for Fonterra. Once the business case was over the line, we then brought in the right data engineering visualization expertise from across Fonterra and externally as well, with a real focus on the data engineering piece. We wanted to make sure that we'd learned the lessons from the past where we haven't got the data foundations right, and spent a lot of money on visualization experts who weren't able to do much because the foundations weren't in place. The tool has been built in Tableau. The reason for that is that Tableau is already widely established across Fonterra, so significant internal expertise already in using it. And once we'd got the relevant experts in, that they felt it was the right tool to achieve what we wanted. We built a close partnership with Fonterra IT, not just within this initiative, but across all of the Tahi program, and indeed the CIO sits on the Tahi exec steer co. It was quite apparent from the early stages that we were going to need significant help in terms of accessing and pulling together the data that we needed. So Fonterra IT have been a key internal partner on this. One of the things that we realized we needed to get was the buy-in from the internal stakeholders. Initially, we took probably quite a top-down approach in regard to this initiative because it was driven by a need to pull together an executive summary performance. But what we found was that we were met with a degree of resistance and defensiveness from some of the operational teams who were quite comfortable with the reporting that they'd built up over time, knew where to get it, and wanted to maintain the status quo. But what we did was probably change tack partway through and really started listening and working with those stakeholders to understand what it was that they liked about what they had today, where we could improve it, how much time a centralized reporting solution would save them per month, and so on. And in the end, we've managed to end up meeting in the middle on most instances. We spend a lot of time mapping against global best practice. There are, as everyone in the room will appreciate, 1,001 different metrics that you can measure across end-to-end processes and shared services. What we were really keen to do was to make sure that we spent a bit of time thinking about the right metrics for the Fonterra environment. And finally, but by no means least, there was an enormous amount of work that went into this initiative from many people. So I'm really proud to be able to present the results of all of that hard work to this audience today. And so into the framework itself, and what you can see in front of you there is the summary level dashboard. First thing to point out is that on the advice of the visualization experts, that blue is the new green, and that's for the benefit of those that are red-green colorblind. You'll see across the top there the 5 delivery towers or operational towers, so accounting services, HR operations, vendor services, customer services, and master data. Under each of those operational towers, there is a process effectiveness section and then a service effectiveness one. For the process part, we've called out 2 KPIs for each, or in the case of accounting services, there are actually 4 shown there. And to my point earlier around service effectiveness, you can see there that we're actually measuring the same thing in the same way across all of the teams for the first time. So the way this dashboard works is that you click into one of the graphs on there and it will take you down into the next level of reporting. Now, I've learned my lesson in the past of trying to demonstrate this live in technology, so you'll just have to use your imagination for a second. So imagine that I have clicked on where you see the button for number 3 on that screen. That will take you down into the next layer of reporting for vendor services. So this is the process effectiveness dashboard. In this instance for vendor services, it's quite busy, so I'm just going to take a minute to navigate through it. Down the left-hand side there, you'll see a number of metrics and graphs called out. The box at the top denotes the metric that you have selected, so in this instance, it's percentage paid to terms. The right-hand side of the screen will change depending on which of those metrics you have selected. Under item number 3 there, that you'll see that it gives you the option to filter the dashboard how you want. There are a number of items like country, region, business unit that you can select. Again, the filters will change depending on your selection on the left hand side. So in this instance, under percentage paid to terms, you could look at things like whether you could look at just items paid to terms or look at items not paid to terms and so on. Worth saying that I've made a random selection of regions in here, so please don't pay too much attention to the data. The other point is that it also includes at this stage intercompany payments, which is why the numbers are quite inflated. One of the first enhancements that we're going to bring through is another filter to allow you to filter out intercompany payments at the click of a button. Down at the bottom there, item number 4, you'll see that you can get down to a really granular level of detail, down to specific invoice level. In the boxes at the top, you'll see some of the numbers called out there, and you'll start to see some of the insights that this reporting is beginning to generate. So a couple of things there that I'll just talk about briefly that we've seen already. One, in the bottom right hand side of those 6 boxes, the number received after the due date. So a significant number of invoices across our business actually only making their way to shared services after the payment was actually due. And so we already have work underway using these dashboards to try and understand what's generating that issue across the business. The other thing I wanted to talk about briefly was the paid early number in the bottom left hand corner of those boxes. So cast your minds back around 15 months or so when New Zealand first went into lockdown, and we were approached by New Zealand government in regard to what we could do to help New Zealand businesses with cash flow during that time. And I also know that payment terms to small and medium-sized businesses is a hot topic on both sides of the Tasman. So proudly, Fonterra were the first company in New Zealand to offer accelerated payment terms to small and medium-sized companies, which in itself was great. But once we'd rolled out this reporting, we realised that the numbers paid early were looking far higher than we would have expected. And what we realised that one of the payment terms that we'd selected to use for those accelerated payment terms was actually pulling too many payments through, and we were actually paying a number of vendors earlier than we actually needed to. So we're now correcting that, and that will have a significant working capital benefit, which is great. One of the other features of this dashboard we really like is the ability to select almost any item of data on it, and it will filter the rest of the page according to your selection. So in this example, I'm just going to filter on one of the entities on the right hand side of the screen, and you'll see how the rest of the screen changes to reflect that selection. And so in this example, I've selected one of the New Zealand entities on the right hand side. You'll see that selection, and the rest of the screen has changed accordingly. One feature we do really like with this chart in particular, so in the middle there you'll see a number of payment terms listed down the left hand side, and then on the right hand side a blue and a red bar. So the blue are those invoices that have been paid to terms against that payment term, and the red are the ones that haven't. And you can see immediately that under there we've got one particular payment term where proportionally we are not paying to terms very often, which is Z120, and again there's work going on to investigate that and why that particular payment term is so problematic. So just taking you back to the summary dashboard for a minute, and now we're going to look at service effectiveness performance. So imagine that I've clicked on one of the service effectiveness boxes down at the bottom, in this case HR operations, and this will take you to the following screen. This looks much like the process effectiveness dashboard, but now we're looking at service effectiveness. And it works in much the same way. You see some metrics down the left-hand side, and then some graphs and other data on the right-hand side of the screen. It's worth saying at this point that a lot of this data we've only started capturing for the first time, which is why some of those lines on the left look so strange. One of the things that we've managed to do within this framework is start capturing for the first time items that have been reopened, or requests that have been reopened. So we now have a right first time measure effectively, which is that percentage of requests reopened down in the bottom left. And on that chart where you see the number 2, the color of the dot indicates whether a request has been reopened or not. So blue hasn't been reopened, red has been reopened. And again, you can hover over any of those dots and it will give you the item number for you to interrogate further. And so that was a fairly whistle-stop tour of the framework and how it works. And I just wanted to wrap up by leaving you with some of the learnings and observations we've had as a result of going through this initiative. First and foremost, that if your data landscape is anything like Fonterra's, pretty fragmented and disjointed, and I know many organizations out there suffer with exactly those problems, that you probably want to double any estimate you receive in terms of the time that this is going to take and the cost. When I was first asked to present around 9 months ago and selected this topic, I was assuming at that point that the framework would have been in place for at least the last 6 months. Sadly, that was not the case, and indeed we rolled it out in the last month or so. But having said that, the tool itself, we're delighted with it. So the results have been absolutely worthwhile, and we're already starting to see significant returns for the time and effort that's gone into it. The next one would be to be clear on whether you're creating an internal view or a customer view. When we first set out, the intention was to create an internal view first, get everyone comfortable with the data and with the metrics before applying a customer lens to it and rolling that out. But unfortunately, because of the way the timelines have worked and the fact that this has taken much longer than initially expected, other initiatives have overtaken and meant that we really needed to get some customer reporting out there. So whilst we've rolled it out, it's probably not as refined a version as we would have liked. Having said that, however, the customers have absolutely loved the reporting. They really value the transparency and the sense of partnership that it's starting to foster, because you can start to see already where there are improvement areas for both the business and for shared services, and start working together on solving some of those problems. So for instance, in the dashboard we previously looked at, where you're seeing the number of invoices that are received after the due date, clearly the business has got a large part to play in making sure that shared services are receiving those invoices on time. So initiatives like that really help to foster that sense of partnership between shared services and the rest of the business. The next learning was around being prepared to continually invest and upgrade. As soon as you start building a tool like this, you start to see the possibilities, the enhancements you would like, and so on. So already we have got a long pipeline of enhancements and improvements. So really making sure that you've got ongoing funding available to add bells and whistles as you go. And lastly, but by no means least, having a clear plan as to how do you build this into your business cadence and culture. When we first started the project, it probably wasn't something that we'd thought about. But as we work through it, we've come to realize how important that was going to be. So thinking about how you make sure that this reporting becomes front and central in the internal operational meetings that the teams have, and also in all of your customer meetings, starting to make sure that we talk about it all the time, that everyone understands the metrics that go with it, how they're calculated, and where the data is coming from. So we've spent quite a bit of time communicating and socializing this internally and rolling out training on how the dashboards work together. And so that's it from me. I hope you found the last 20 minutes or so useful, and now happy to open it up to any questions you might have.